any idea with a bad team means nothing.
Yeah.
And a good team with a bad idea, the same. So I think we have both, and we've proven that we have both. We have a very good team, multidisciplinary team. We have real estate operations, tech experts. So we have good team leaders in key positions. And then we have traction. I mean, numbers talk. We closed the year with 3.7 million revenue with 40% gross profit margin. This year, we're going to close with close to 10 or a bit more than 10 million in revenue. We are growing with more than 300% year-on-year growth. We're talking about the real estate business growing 300% year-on-year growth. That's I haven't seen something similar, to be honest.
Me neither, to be honest. That's why I invested as well.
So execution, we are executing. We have a good team. We have a good business model.
Excited today to welcome two of Cyprus's most successful entrepreneurs of our time, I would say. Demetris spearheading the Moving Doors project, and George having enjoyed a lot of success with Foodie, now part of the Moving Doors team. Welcome, guys. I'm very excited to have you both here.
Nice to be here.
Can you both briefly describe your professional or academic backgrounds and explain to the audience a little bit more about yourself?
Sure. I'm a civil engineer. I studied in Athens for 5 years. Then I moved to the UK. I did a master's in real estate finance. I worked there as a development analyst, so I was basically crunching the numbers for a big developer there. So I was familiar with the real estate landscape in the UK. And then I decided to move back in Cyprus, and I worked for Resolute Asset Management, so effectively assisting in the restructuring of the Cypriot economy in the NPL, non-performing loan sector in Cyprus.
All right. George?
Cool. Me, after studying computer science in Imperial College in London, I came back to Cyprus working for semi-government corps. Then I started my entrepreneurial journey doing various side projects until I met a more serious team where we built first at your service, then we did Foodie, where we exited in 2019. I've been working for the Delivery Hero Group and eFood in Greece after that. Then I met Demetris, who urgently needed a co-founding CTO. So we joined forces, and for the past 2 years, we've been building the Moving Doors platform and business.
Exciting. So let's talk a little bit about that, the founding story, Dimitri. How did you come up with the idea to start Moving Doors? Did you see a gap in the market?
Sure. So it was when I moved back from London to Limassol, my hometown. And I was trying to rent an apartment for myself because I didn't know, where I was going to be located. I was trying to find a job probably in Nicosia or Limassol. So I went on Bazaraki.com and I was looking to rent an apartment. So what I understood is that most of the apartments were unfurnished or semi-furnished, with very bad quality design furniture. The interior design was very bad. When you needed to move in, you need to connect the utilities, which most of the time takes you a lot of time. You need to go to the EAC and to the water board, show your lease agreement. Then you need to go to SIDA or any other provider for the internet. They need 30 days to connect the internet. Then you have to go to IKEA or any other place to buy forks and knives and bed sheets. And then most of the times, most of the landlords are not professional landlords. It's like any retail landlord that owns 1 or 2 apartments. So any support post entry, post lease, it's at least average. So I thought that it was a big issue for me because I'm a convenience user in general. I like to pay a premium for a service. So I thought that this is a big problem, at least it was for me. So I asked a couple of people and I asked them whether they find this as a common issue. And I understood that it's a very common issue for many people. So I searched the space. I saw lots of big competitors operating serviced apartments globally, such as Blue Ground.
One of the first Greek-based unicorns, right?
Exactly, yeah. Now they're valued at around $1 billion. They have raised almost 300 million euros. They are operating in 32 cities.
Doing pretty much what you guys do.
Doing something similar, yeah, something very similar, yes. The inspiration was definitely through Blueground, Z-Room in China, and some other American brands, Lime Home. So I researched a lot of companies that are doing something similar. And then I researched the landscape in Cyprus. So I thought it was probably a good launch pad for, to test the ground and then scale it up elsewhere. So we started with our first apartment in Limassol. It was a 2-bedroom apartment near Costa Coffee in Limassol. Basically, we rented it for 800 euros. We went to IKEA, we furnished it, we equipped it, and then we put it on the market for 1,400 euros.
Okay.
We started getting leads. Within 2 days, we rented it out, and that was my validation. So I said, okay, people want to pay more for this service. From there on, I met Yannis, my co-founder.
Talk to me a little bit more about the rest of the team. Spearheading this project.
So we started moving those with Yannis, and then Kyrillos and George joined. Yannis is also a real estate guy. He has a background in computer science, but never worked as a software engineer. He's a hardcore real estate business development guy. He was the CEO of Dominican Group, a big real estate development company in Paphos. He's a real estate sales and business development person. So that was very helpful because he basically did all the deals. He brought all the deal flow, most of the deal flow, both in Limassol and Paphos. He's a very hands-on guy. He was very helpful, especially at the beginning. Then Kyrillos joined the team when we had something like 20 apartments in Limassol and Paphos. And he's
COO of the project. Yeah.
He started actually as an analyst, and then within 2 months we were like, okay, COO. He's a brilliant guy, an Excel mastermind,
get things done.
Exactly. He's the executionist.
Yeah, exactly. And George?
And George, 1 or 2 months after Kyrillos, we were trying to find a CTO because we decided from the beginning that Cyprus was going to be our testing ground to do at least 100 apartments the first year, test the market in Cyprus, and then expand elsewhere. But we knew that at the core of our operation, we needed technology in order to scale up profitably. Because this business, if you don't have technology, is never going to be profitable. It's all about operational efficiencies. So we were at Reflect Festival in 2022, I think. 2022 summer, where I met Michalis, the CEO of Foodie. And he suggested George, and the rest is history. I went to Nicosia, I convinced George.
Exciting. Right. So how exactly does Moving Doors work? What is the business model? What's the core model of the business? How do you guys make money?
The business model is quite similar and quite common in other countries. It's called rental arbitrage. So effectively what we do is we lease unfurnished apartments or semi-furnished apartments for, let's say, 1,000 euros a month. We commit for a long-term lease agreement, 3 to 5 years usually. We usually invest on buying furniture, FF&E, electrical appliances. We do the interior design, and then we sublease the apartment for periods of 1 month and longer.
Are there any exit clauses within these lease agreements from the side of the landlord, for example, or from the side of Moving Doors?
From the side of the landlord, no, because we invest a lot of money in each apartment. So we need to have we need to secure at least 3 years so we recoup our investment.
Yeah, exactly.
In terms of Moving Doors, yes, we have break clauses with 3 months if the market is, it's softening.
You have to protect yourselves.
To protect on the downside, yes, we have a 3 months clause for an exit.
Good. Anything you want to add?
I mean, one really important thing here is that all this operational model and the business model and how we actually go and make money involves a lot of support behind the scenes to maintain both the relationship with the landlords, both the relationship with the tenants, and especially the relationship within the team. So basically, all the things we do behind the scenes, we are very operationally heavy. We try to maintain this good relationship across all touch points.
I imagine it's difficult to do.
Yes, it's very difficult to do. Very different disciplines
Yeah.
In the team, and very different disciplines both in tenants and landlords as well. So we have a lot of different profiles of people that we interact with day to day.
Dimitri, there are a lot of other competitors globally in this market. You mentioned briefly about Bloomground. What are the similarities of Moving Doors with this kind of players, and what sets Moving Doors apart? What does Moving Doors do differently from this?
Very common and good question. So you can compare it like with hotels. What separates Marriott from any other hotel brand, for instance? First and foremost, I think, is brand positioning and generally positioning. So Moving Doors is a premium serviced accommodation provider, which means that, and premium in the sense not just interior design, we have a very strict selection criteria when we choose buildings or apartments. So we usually take brand new buildings in locations close to the center of the town, close to offices. Usually our buildings have facilities like swimming pools, saunas. So selection of asset selection, number one. Number two is standardized interior design. So we have a brand identity that positions us, like, for instance, Blueground wants to cater like a more wider audience. So they target mid-level corporates. We are a step above that. So we are more expensive, we are more premium, and we're positioning ourselves as a more premium service accommodation provider. So that's one. Number two is technology, both on the front end and on the back end. On the front end is the whole booking and user experience. So you go on our website, you see professional photographs, 3D tours of the apartment, floor plans, detailed description, location. So you have all the information online. And then the whole booking process happens online. So you can select your dates, you can move to the checkout pay either with Visa, you can pay with a PSP payable, you can pay with a bank transfer. All the contract signatures happen online through the help of PandaDoc. So the whole experience of the user is online. Something that many service apartment operators don't have. I mean, there are companies that operate 300 to 400 units, and they don't have any front-end technology. So that's number two. And number three, and the most important, like in terms of technology, what the user sees is 5% or even less. It's the tip of the iceberg of our company. The backend, the whole backend, the admin tool, the backend, the backbone of our company is the system that we built for operations, not just operations. So our platform has API with lots of portals like Bazarakis, Pitogados, Airbnb, Booking.com, Rentals United. So with a click of a button, our property gets distributed to lots of platforms. So you increase the visibility of the apartment. So that's one. So in terms of marketing, we have a lot of reach with not so many operations. Number two, I'll give you another example, credit control. We have notifications, automated email notifications and push notifications through WhatsApp to all our tenants. So every month when someone needs to pay rent, he gets a notification through email, he gets a notification through WhatsApp, and we see on the dashboard who needs to pay what amount. In terms of operations, customer support. If you want to report an issue, or if you want to book a cleaning, or if you want laundry or iron or any other service from us, you just log in your tenant portal.
Is this an application?
It's not an app yet.
Okay. What is it?
It's a web app.
It's a web app. Okay.
So you log in from our website. It's a web app, and then you can take a picture, report your issue. Automatically goes to our customer support agent, who is then assigning the ticket to your maintenance responsible person. That's another automation, for instance. Then for the cleaners, we have calendars in our backend. We know when each checkout happens, so all the cleaning team is synced and they know when to go and clean. So we have many automations basically to increase efficiencies in operation because it's a very high volume business. I mean, this year we're going to reach almost 10 million euros in revenue. And we work with EBITDA margins of like 12%. Which means that if you hire more people to do the job and you don't use technology to limit the amount of people you need, then it means that you're not going to be so profitable.
Yeah.
So the whole philosophy is that we're trying to automate as many businesses as possible. For instance, we use QuickBooks in accounting. Imagine our bookkeeper to manual input on QuickBooks, on our ERP, and then to use that for reporting purposes. So what we did now is we synced our ERP, our backend, with the accounting software. So that saves a lot of time for the bookkeepers. So generally, we map out all the process of the company. We have a product manager in the team who takes these requirements, assigns, and then builds requirements and gives them to the tech team for tools to be developed in order to operate as efficiently as possible.
Very exciting stuff. I don't know, George, if you want to add anything to that.
Yeah, I mean, that part, and it's a funny story. When I met Demetris, what I asked him was, is this a prop tech company or just a real estate company? Like this was the main thing. I mean, I've been building dashboards and CMS systems and ERPs for the most of my career. And I've seen a lot of processes mapped to systems. And with Moving Doors, we had the chance to go from the MVP. I mean, in all honesty, I mean, on the front end, we spent like 2 months at the beginning. That was it. Then all the effort we put on the tech side was to build basically one tool for the whole team to go in and do everything that they have to do that is core to the business through that. So everything is managed from our admin system. Yeah, even marketing stuff, operational stuff, even the checkout process to see what's happening in the apartment, if there are any damages, if we need replacement to things, all goes through that. It's the same tool. I mean, the agent logs into their tablet and they do the process. And a very big part of this, again, is for the value we want to bring to our landlords as well. Like, it's one thing that we have in the immediate future to actually be more transparent to our landlords on what is happening on their property through the dashboard for the landlords. It's one of the next big projects we're going to do. Because we have a model with revenue sharing as well. So it's really important to have exposure on what is happening. I mean, the landlords are our partners essentially to this. So it's really important we have a good relationship with them and we make the process as hassle-free as possible for them, because it makes even more sense to have your property on Moving Doors.
Very impressive stuff, guys. And this is also reflected in the remarkable growth that Moving Doors experienced over the last couple of years. You started with one apartment, as you said, in February 2022. And 2 years down the line and some change, you are sitting now at approximately 315 apartments, including those in the pipeline, which is amazing growth. One of the key things here is the selection of the properties. You briefly touched upon that, so I want to expand a little bit on that. How do you select the properties, and what is the typical discussion that you have with a landlord? You said that you are a little bit more of a premium brand than other players in this market. So you are targeting the corporates, those that maybe come to Cyprus to work in high-paying jobs for 6-12 months, for example. So you need the apartments to be close to the city to be convenient for them. So let's talk a little bit about that.
Sure. First of all, we identify locations with high concentration of offices. Because that's the main driver of demand for serviced apartments. Secondly, we prefer buildings because operationally it makes more sense to operate and set up a whole building rather than 10 scattered apartments here and there in different locations. So usually the discussion that happens with the landlord is that we reach out or he reaches out. We send a list of we have a list of prerequisites. So you need to have certain things in your apartment, such as air conditioning units, oven hob, extractors, lighting, whatever. So we have a list of, and then we give 2 options, either long lease agreements or revenue sharing, with 2 risk profiles. So if you are, let's say, a foreign investor and you just want a steady, predetermined rental income per month, then you might opt for the long lease option. You know what you're going to get every month, the same date, you get paid. If you're like you have a slightly more risk appetite and you want to share the upside and the downside, then we opt for a revenue sharing model. Usually it's around 80-20, which means that
How does it work exactly?
So for example, if you have an apartment, we furnish it, we rent it out, let's say for an average 2,000 a month. We charge 20% of the revenue for our services. Our services include distribution, property management, and everything else. So you make probably more with the revenue sharing scheme, but you also bear the vacancies, any potential losses.
It's more risk.
So we give that option. The other thing we do is that we give financing option for furnitures, which is quite interesting. For instance, if you have an unfurnished apartment, but you don't want to rent it for the price of an unfurnished apartment. So let's say an unfurnished one-bedroom apartment in Limassol costs 1,000 euros. And a furnished apartment in the same location, the same apartment, you can rent it out, let's say, for 1,500. If you want to rent it for 1,500, we can get like a 6-month rent-free period where we finance the acquisition and the setup of the furniture. And then you give us a rent-free period to recoup that capital expenditure. But the furniture stays on your balance sheet, not on our balance sheet.
That's very smart.
So that's a good financing option for people who don't want to rent their apartment cheap. They want to maximize the revenue they can get from their apartment, but at the same time, they don't want to bear the upfront cost of furnishing an apartment.
Okay, so lots of options for
we are
landlords.
very flexible and we have lots of options. So
so that really helped in the growth that you have shown so far.
Yes.
Yeah. So okay. You've already started an expansion in Dubai. So you started with Cyprus, Limassol, Paphos, Larnaca, the apartments, yes. And recently, about like a couple of months ago, I think, you've went into Dubai, having already some operational apartments, many more in the pipeline. Why did you choose Dubai as your next market? And then do you have any other plans of additional markets that you are trying to go to after Dubai?
So we spent something like 6 months trying to decide on new markets because our model doesn't work on all markets. You need to have some certain factors to make this business model work. One very important factor is the nominal rents. So if rents are very cheap, so if we go, let's say, to, I don't know, any place that the rents are below 1,000 euro on average for a 1 and 2 bedroom apartment, that means our gross profit margin is very low, which means that our break-even period goes to 2 and 3 years. So the business model doesn't work in cities where the rents are cheap. So because of the business model, we need to go in certain markets where it's expensive effectively to rent. So one of the main reasons we chose Dubai is because rents are high. Like for a 1-bedroom apartment in downtown, that's like 3,000 euros a month.
And lots of people go to work there for 1 year, 2 years, 3 years
92% of the residents in Dubai are foreigners. And most of them...
Staggering.
92%, And most of them are like less than 40 years old who work for big tech companies or fintech companies or... So it's the kind of clientele that fits us.
Yeah, and they get paid well, so they can afford to pay a premium price.
Yes. The third most important factor is the spread, which means that there is a big enough difference between furnished and unfurnished apartments to support our operation. Our gross profit margin on average is around 40%, close to 40%, which means that if we see that cities have less than that, our business model is not that profitable. So we have to identify cities with gross profit margin of around 40%. And we did that through web scraping. We went to Bayut, Property Finder, big property portals in Dubai. We scraped unfurnished 1-bedroom apartments in downtown, furnished apartments in downtown. We identified the averages and we saw that there is a big spread enough. So that was a good market. So Dubai ticks most of the boxes as a city for the business model we operate. The only issue is competition. There is, you need to be a very good operator with very good design, with very good unit selection. You need to be careful on what prices you onboard new apartments. So it's a difficult market, but the supply of new units is big enough so you can scale. So another reason is supply of unfurnished apartments. I mean, they are building something like 7,000 to 8,000 apartments a year. So we have a big pipeline to scale. Imagine that Blue Ground operates 1,500 apartments there. And many other, by the way, the Silk House operates 350 apartments. And there is small other operators.
All right. So any other markets that fit those conditions that you have set out?
For the same reason, Saudi is a good market.
Okay.
And Saudi doesn't have the same level of competition. So Saudi is definitely a good market. And the other thing about Saudi is that they have this 2030 vision. So they want to diversify from oil and gas. And one of the main pillars
sports,
is hospitality.
Gaming, stuff like that.
And hospitality is one of the main pillars. So generally the government is pushing towards diversification and specifically towards real estate and hospitality. So we believe, based on the research we've done, that it's definitely going to be a good market for us, and a sizable market for us.
Exciting. Right. So Moving Doors is a prop tech company, property technology. You've already shared a lot about the technological integrations in Moving Doors, but I want to go into a little bit deeper into that. George, you mentioned something like the front end and the back end. The front end being only just 5% of what's happening behind the scenes. So Moving Doors is enabled by technology to grow fast. So what exactly does technology help you to do and achieve? Well, obviously, streamline operations.
I mean, okay, integrations we talked about, like we integrate with as much as third parties as we can. Or the operational stuff or the flows, what happens from the time we onboard the unit in the pipeline until the last checkout of the tenant, all our interactions with the tenants, all the legal stuff like compliance, contract signing goes through the platform, price adjustments, and specific flows that are usually have follow-ups. Like if I'm checking out of an apartment and the agent comes in and sees that there is a damaged couch. So this is to be a follow-up. It needs to go to a purchase order or to a repair session, a replacement. Maybe the next check-in must be delayed a bit, or we find another solution. We have a huge in-house warehouse management system so that we can easily streamline it in our operations. And generally, what we are trying to expand towards is to minimize the manual effort required to keep all our customers and partners happy. Like this is the main gist of what we're trying to do.
Improving the customer experience and at the same time minimizing the costs of running this business and improving the margins.
Exactly. And we want to have our people do more high-level jobs in terms of the effort they put, like, and reduce the manual, cumbersome.
Any work that the computer can do, it should do it. And then the people should focus on more high-level, important things.
Even bigger value to the whole team.
Okay, exciting. So, Moving Doors raised recently over 1 million euros from 3 venture capital funds back in January. So, what have you done with those funds so far? And do you still have any resources left from that round?
We do have approximately half of the round still available. We used around 250,000 for the Dubai launch, which is like setting up an office there, an apartment for our employees, recruitment, CapEx. And the problem with Dubai is that it's very capital intensive. You need to pay up front. So that's that. Dubai, we grew significantly in Cyprus since the closing of the round. So
What's the distribution of apartments, Cyprus and Dubai?
In Dubai, we just have 10 operational apartments and another 10 in the pipeline.
Okay. And the rest are in Cyprus?
And the rest are in Cyprus, But we secured around 100 apartments in the last 2 months. So of the whole CapEx.
Of course.
But
you got the fuel, so you need to spend it.
We recruited more. We recruited another 2 software engineers. We recruited more operations teams. And now the reason we're doing the crowdfunding is basically to launch Riyadh and recruit another full stack developer. Opening a new market is quite expensive because you need to do the first setup.
All right. So the crowdfunding round is more of a bridge round.
This is a bridge round, correct? And we are planning.
By the way, congrats on surpassing your minimum target in just a few days. But the maximum target is 430K for this round. So we still have a lot of room to go for that. Correct. And obviously, the investment is still available for anyone watching this. All right, so this crowdfunding round involves a convertible loan. This convertible loan will convert into equity at the next funding round or at the end of the loan term, which is 3 years. So as myself, as an investor in Moving Doors through this crowdfunding campaign and many others that are watching, when can we expect to have our convertible loan turn into equity, which means is another way of asking, when do you expect to have your next funding round?
We already started preparing for a Series A.
Okay.
First of all, this year we're going to reach probably more than 10 million revenue, and then from there on in excess of 25 in 2025. This is our expectation. So we are expecting Q1 of 2025 to close the round. So we are starting pitch decks and preparation from now. We're going to do the first reach outs. We already have commitments for more than 2 million euros from now for the first round. The round is going to be, the Series A round is going to be around 6 million euros.
Okay.
And that's going to fuel both Riyadh, and we're also eyeing new markets, probably Eastern Europe.
Okay.
So that's going to fuel both existing markets and new markets. We're thinking to open in 2025 2 to 3 new cities in Eastern Europe.
All right.
So it's going to be between 30 to 40 million valuation, depending on the demand. And it's going to be around 6 million euros.
Okay. So the crowdfunding round probably would end somewhere between June or July now in 2024. And you said approximately Q1, Q2, the next funding round. So a little bit less than a year until, something like that, until we have our loan converted into equity. Of course, you can never predict the future, but that's the expectation as we stand here. Right? Great. Now, the tough question. Why should investors feel confident in investing into Moving Doors?
Okay. I think it's 2 things generally investing in anything. First of all is the team. How capable is the team? Because I think any idea with a bad team means nothing.
Yeah.
And a good team with a bad idea, the same. So I think we have both, and we've proven that we have both. We have a very good team, multidisciplinary team. We have real estate operations, tech experts. So we have good team leaders in key positions. And then we have traction. I mean, numbers talk. We closed the year with 3.7 million revenue with 40% gross profit margin. This year we're going to close with close to 10 or a bit more than 10 million in revenue. We are growing with more than 300% year-on-year growth. We're talking about the real estate business growing 300% year-on-year growth. That's I haven't seen something similar, to be honest.
Me neither, to be honest. That's why I invested as well.
So execution, we are executing. We have a good team. We have a good business model. I mean,
George?
The fundamentals are there. I mean, anyone can see them. And what I am for this crowdfunding campaign is that anyone has a chance to invest in real estate, combined with prop tech and everything we do. I mean, you can invest with minimal funds, whereas traditionally to invest in real estate, you need basically 100K plus. So with this opportunity, like, it's very easy to invest in real estate. And
and not just in real estate, and a startup as well.
Exactly,
before crowdfunding, if you wanted to invest in this like real estate or startups, you needed to be a high net worth individual or an angel investor and invest from 50, 100K tickets plus. But with crowdfunding, anyone can join this exciting venture and can enjoy the financial rewards that may come with this, alongside the founders and the team and the employees and all that. So good. And one last thing, this convertible loan, we said, will convert into equity. So what we as investors would like to see is, how are we going to get paid? One of the main thing, and usually what you aim for, is an exit with Windows. So have you figured out yet any potential exit strategies about Moving Doors?
First of all, lots of people ask me about dividends.
That's another way they can get paid. Yes,
but if you want to grow with the levels that we are growing, it's not possible to give dividends because effectively you are investing all the retained earnings of the
It's
company.
in the investor's best interest, not to give money
Assuming
the dividend.
the investment of the money is high enough. So assuming we
the
invest
return on investment.
return,
Exactly. Yeah.
So we are investing the money all the time in new properties, in new hires, in expansion, in new markets. So it's not possible at this time, at this early stage of the company, to give dividends.
You may eventually come at a time, let's say 5 years down the line, where you don't have that much growth, and then you can say, okay,
correct.
Let's chill down a little bit with the growth and distribute dividends to investors.
Probably, and the company was built from the beginning for an exit. It wasn't built for dividends.
Okay.
So we said we're gonna build a global company, high growth company, tech company, and grow fast. So dividends is not an option. What we're aiming for is for a good exit. And this might happen. We already had discussions, and bigger companies already came to us to buy us out. We're not interested at this point in time. What we are interested is growing the company for the next 3-4 years, and then maybe we'll see, depending on the market. Now, who's going to be the buyer? We have in mind many buyers. A buyer can be a private equity fund that wants to enter the space. A buyer can be a hospitality company, something like Marriott, that wants to expand to serviced accommodation. Another buyer can be a bigger company, well-capitalized, US-based company or European company.
That wants to gain access to the market.
Access to new markets, access to technology, access to people. So I think we have many people and many type of investors that might be we might be an acquisition target for them. But it's not for the time. Not for the time. I think we can gain much more the next 3 to 5 years than.
That's the target. George, having yourself been through an exit, how do you see this? Is Demetris talking the truth here?
Basically, yes. Listen, I mean, at any time anyone has a price that they give something away. I mean, it's natural and there. For now, I mean, we are not chasing an exit right now.
The focus is on growth.
Part that we said before, I mean, now we could say, okay, we have an SME in Cyprus, and we sit back, we optimize and make everything efficient in terms of cash flow, in terms of people, contain everything down, and actually be able to roll out dividends next year. But that's not our target. Our target is to grow. Our target is to, provide more value to both tenants and landlords, and for us to actually penetrate deeper, also vertically in the markets that we are, not just horizontally to new cities. And for that, on that part, we are still a bit back. So there is a lot of opportunity to increase revenues, increase EBITDA. And I mean, if we got a target for acquisition for someone and they come and an offer makes sense, I'm sure everyone agrees that
we will seriously consider it.
We will consider it.
The other thing is that we could optimize the company for dividends, and we're not doing that. So, for instance, now we employ 45 people. The team is around 45 people. Half of these people are not needed for operating the existing portfolio. Half of these people are for growing the portfolio. So if I just remove this payroll, we can be massively profitable in this.
Your margin will skyrocket.
But it's more important for us to grow faster. So the whole mindset and mentality is growth.
Perfectly understood. Me as an investor, I like what you're saying. I think most of the people watching would like what you say. It makes sense. As long as you keep growing your top line and bottom line, you can achieve a higher multiple as well further down the line, which boosts the return of the investors in the end. Okay, so any final messages that you want to leave this podcast with? Many people that are
I'm not good with final messages.
Okay, many people that are watching this are considering whether they want to invest in moving doors. We touched upon many of the things, but I don't know if you want to say any last things.
I would say invest. Don't invest your life savings. It's something that is definitely risky. It's something that might have a high multiple and a very high IRR when we sell. But it also has a risk. So definitely, if you're going to risk a portion of your net worth, risk a small portion of your net worth, because this is a high risk investment. It's not as you're investing in real estate, as you are buying an asset, or if you are buying a bond. It's a startup, it's an
profile.
operational company with high growth. So
so put not all your eggs into these baskets.
Exactly.
Spread them out into many baskets. One of those baskets being moving doors.
Correct.
Yeah. All right. Where can people learn more about moving doors if they wish to do so?
They can definitely contact us. If they like, we can provide them access to our data room and see more detailed numbers. You can send them our pitch deck. I mean, most of the information is on crowd-based platforms, so I don't think there is a specific need. But if someone wants to invest,
maybe there's a landlord watching this. Where can they contact you?
They can contact us.
Movingdoors.com is the
movingdoors.com. There is a contact form, or they can give us a call.
All right, and obviously, as you touched upon already, the crowdfunding campaign. Anyone who is verified on our platform can gain access to all of the information they need, but we are also readily available and very transparent to share any more information that they would like to see. All right, gentlemen, it's been a pleasure. Thank you very, very much.
Thank you very much.
See you soon.